Good morning, my name's Ryan Littlestone from forexflow.live. This week we're going to have a little bit of review and a continuation of the theme from last week, and that's looking at euro dollar and this big play between 110 and 112, this big option range that we've got in play at the moment. From last week we saw the price move down, it got under 111 and we've seen it push all the way down to sort of the 110.20 area. Now this is where it's found quite a strong line towards the end of last week, and we haven't been able to get below that meaningfully. But the bounce so far has been very weak. We've only managed to get up to sort of the 30s. So the pressure really is still on the euro dollar down here, and we've got all this big option action happening at 110. What we're also hearing this morning is now there's big stops building through this 110 area. So this is a level that we're going to be looking at, I'm going to be looking at very closely. Now, last week we said the way to play this level was that because we've got this range 110, 112, is to look to trade in between it, so buying against the 110 area, selling against the 112 area, but also looking to go with any breaks of those two edges, because if we do get a break, the chances are it's going to be a decisive break, and there's going to be enough impetus behind it to push the price either further down or further up above those two levels. So as I was looking at last week, the way to trade it is I'm looking to go long into the 110 area as close as I can to it, then look to perhaps stop reverse the trade if it does break into a short just underneath, and then what I'm looking for is, as I say, a continuation of a break and a push lower. Now, we've been here before, been here several times, and what we've seen is that any breaks of the 110 area are sort of run into trouble around 109.90, 109.80, so it hasn't been a decisive break in the first instance. It's only been sort of a secondary move that's seen it push down much further. So that's the risk of the trade, that you do get a break and you go with a break, reverse into a short, but it doesn't get down that far. So the way to play that is to keep your stops tight. You can keep the long tight against the 110 area, and if you happen to reverse into a short, then you keep that short trade tight, maybe back above 110.10, that sort of area there. That way you stay in a trade, or you get in a trade, you're not throwing too many pips at it, and if you get a break either way, then you're going to be in the money. If it doesn't work, if it all fakes out, then you're not going to lose too much having a go at this trade at all. Now, what you don't want to see is the price break, come down a bit, reverse back up, get stopped out, and then find you just umming and ahhing around this 110 area. If that happens, then the way to play is just to sit back, let the price decide what it wants to do. Perhaps it will find support at 110 again. Perhaps it will sit under and find resistance at 110. But if it gets to a situation where you're up and down, up and down, up and down, the best thing to do is sit back and let the currency resolve itself, and then look to go with any move subsequent to that. And what you want to be looking for is confirmation. So if we do break below but come back up this 110 level, look for confirmation that 110 is support again. And if that happens a few times, then that gives you a bit more conviction to go long, and maybe we sit back in the range. So lots going on. It's as is with the case with most of trading, sometimes it can be a waiting game. We've waited for a week to see if we get this test. We're still waiting now. As I say, the bounces are pretty weak to 110.30. 110.20 is the support at the moment, and we'll see what happens, and good luck this week for your trading.